Hello everyone, I hope you had a great trading week. I know it was a little like watching paint dry with all the lackluster volume we've been having, but I hope you could find some ways out there to make some money. And I want to start off with my full disclosure. I am long puts on the Dow and long puts on the VIX, so that if the market keeps rising and rising and rising, and the VIX keeps falling and falling and falling, with it, I only stand to lose about $100. So while I do day trade during the day, I have these longer term options out there to try to make some other cash. So, and of course, if the market falls, my Dow puts will reward me and the VIX puts would just expire worthless. Okay, so let's talk about this little rally here. This rally has been more of an absence of selling than an actual cash rally, because a cash rally comes from actual cash, and this has been low volume and nobody's really been participating. You know, I was listening to our weekly webinar through Thinkorswim that they put on for free for their clients, and one of the guys was saying that their customer activity is down 10% throughout this whole rally. They have been just, nobody's been participating, and you can tell when a move is a real move when there's actual participation along with it. Like over here, they said there was higher activity, and right here there was higher activity, like spikes in activity, but it's still 10% off the normal. So that's probably a good indication of it's kind of not a real rally. Now, let's talk about this channel here. This channel that we've been in has not been broken yet. We're still in it, but it will be broken over time. As we chug along in time, we're going to cross through this line, because we're not just going to keep going like this. I mean, it's very, very, very unlikely, but as we cross it, we're going to cross it. And what happens when we cross it is what matters. If it's violent, if it goes way down when we cross it, or if it just kind of consolidates, then that's kind of a good indication of what's coming down the road, at least in the short term on that one. So let's talk about these arrows. I wanted to show you these arrows here. These are sell point indicators that I've been getting from my system here. And the purple arrows are from the RSI crossing over. I'll show you what that means. I'm going to add the RSI to the bottom of the chart here. Let's say show study. And you can see every time when we cross through this 70 line here, it's around 70. I don't know why it says 69.73, but we cross through it, it gives me a sell indicator. It says, okay, time to sell. And then we cross through it again. We kind of went back up a little bit because we had these two buy days. And then we crossed through it again, and it gave me another sell indicator. And since this isn't actually on 70, I don't know why it's not, but there's a purple arrow right here where the blue is. So I've gotten 3 sell points from the RSI indicator. And even if it was here, you couldn't see it because it'd be overlapped by the blue one. And so let's talk about what the blue arrow is. The blue arrow is from the MACD crossing over. So I'll show you that. And these are all overbought, oversold indicators. And they all have been telling you that we've been overbought. But now they're telling you that it's time to sell. So let's get rid of the RSI and we'll show the MACD. So apply. And now you can see there's actually been a divergence in the MACD, I'm sorry. As we've been going up, the MACD hit its peak and has been going down. And now we finally had this red bar. And once we get this red bar, that's when they tell us up here it's time to sell. So that's a good entry point for a seller. Now, we have another arrow. We have the green arrow up here that you can see here. This is a nominal high, at least for I think the past 18 months right here on the S&P 500. And we got a green arrow telling us to sell at the nominal high. Now let's go to edit studies. Let's take out the MACD. And this one is the stochastics. And I'll show you that one. Now you can see, look at this fantastically overbought conditions we've had here. Now this is more of a momentum indicator, but it still indicates overbought, oversold. And you can just see we almost hit 100 on the stochastics here, but it's kind of been diverging also. It came down a little bit here. Now we did cross over, and when did we have that crossover? Right here, which gives us a beautiful sell point. And we'll see if that actually turns out to work in our favor. And yeah, so that's that. Now, you can see that we had this green arrow up here, and look what happened. This lighter green arrow down here is from when the stochastics crossed down here. And I think that was a pretty good time to buy. If you got in right here and you bought, you're probably pretty happy with yourself. So stochastics are used by the pros and everybody else, so it's a good thing to follow here. So this whole last little run here seems to be running out of steam a little bit. Seems to feel toppy. Now, let us talk about one reason to be bullish, so I can be a little unbiased here, although I am a little bearish lately. Let's show you the Williams accumulation distribution is what the AD stands for. And that doesn't seem to be diverging. It seems to just still be going up. But accumulation means buy, distribution is sellers, and it seems to still be going up. And the zero line's right here. If we really got through a big sell, that zero line would show the amount of sellers being more than the amount of buyers as far as the accumulation distribution goes. We are still up on that, but if you look at all the other indicators, I'd still say it's a good time to sell. Now, everybody wants to tell you that the path of least resistance is higher, that if you are long, and you want to get long, that you're not going to run into too much resistance as we go higher. I tend to disagree with that because I think while the path of least resistance may seem higher, the way you're going to get rewarded more, the higher reward is short. And that's why I am a seller. I think it's going to be a pretty violent down move when we finally do get one. And we did have a number come out today. On Friday here we had the unemployment numbers. And while fundamentals tend to be all people talk about with the market, they don't really move the market like technicals do. And you have to remember that the market takes any news to react in any direction, good or bad. How many times have you been caught in that when the market goes up on awful news and down on great news? So it takes any news, and good or bad, and reacts to it in whatever direction it was going to react anyway. So remember that. Now, I want to show you what happened in natural gas to kind of show you what we could be happening. Now, this is not a commodity. This is a commodity, and S&P 500 is not a commodity, but it certainly has been acting like one. So I will show you natural gas. We have been just crashing and crashing and crashing in natural gas. We were up at $6 and we got down into the threes. So, I mean, it seemed like it was only going to go down. That's what people thought. It was only going to go down. And then look what happened. What was it? Yesterday. We had a 5.61% move in one day. We got out of the threes and up into the fours on just a number, just some little fundamental number that came out. And we engulfed this whole area, and it was a pretty good violent short squeeze. So that's the commodity there. And if you want to kind of get a clue on what's going to happen Monday in with your stocks, we have to look at what happened today in I'm going to go down to the 15-minute level in the euro. This is the euro US dollar. And we had a violent down move in the euro once this news came out today. So there's your indication. You can see we had been going up, and then bam, we slammed down there. I'll show you. It happened in all the currencies. Let me go to the Australian dollar. While the Australian dollar doesn't seem as violently sold off, this was when the news came out. It spiked up and it immediately went down, and we did close below from where the actual figure came out. And another good one is a US dollar JPY. US dollar is very weak here, or very strong here. I'm sorry, very strong. Across the board, the US dollar had been strong, and that's usually a good indicator that the market's going to go down. Although they're not moving in tandem anymore, they tend to be, usually moving in tandem on the news releases like this. So now you can have a look here at the S&P futures that we had. Now they did spike here and it actually hit a new high, but the NASDAQ futures did not, and this is when the news came out, and neither did the Dow futures. They got within a tick of new highs, but they didn't So we'll see what happens there. Now, this seems to just be a sucker's rally. This is low volume too. The volume wasn't nearly as much as it is on a normal day. So we'll have to see what happens and just take a look at the real activity is going to happen Monday when the real people are involved. The people that have been sitting on the sidelines just watching this action. So I hope you had a great week. I hope you have a great week coming up here. And once again, I think we are headed lower. And hope you all make money out there. Thanks. Bye-bye.